Will the stocks of these regional banks that are facing challenging times, will they rebound? So we're looking at the QABA ETF, and these are the holdings. A couple of them here, quite up to 151 of them. So look at this one, PacWest Bancorp. It's down 50.46% year to date. Yes, year to date. That is since this year 2023. It's down 50.46%, and a couple of other ones. We haven't really gone deep to see everything. Let's see here. This is on page 3. Let's see. Some of them have taken a lot of hammering, and yes, naturally you would expect a rebound at some point to happen. But we can see this one, MBIN, up 10.03% year to date. It doesn't mean that it hasn't been affected. Maybe it hasn't been as affected as much. So there are about 151 of them. I want to believe, yes, 151 of them. Yes, this one is down on 26.93. That is SFST, Southern First Bank Shares Inc. But yes, we also heard about Credit Suisse having issues as well. I mean, some are saying yes, the bank hasn't exactly been known as a very good bank. It hasn't been really known as a good bank. But as experts are saying that regardless of that the ECB and the Swiss National Bank, which has now stepped in to lend the bank up to 50 billion shares, $50 billion, they're not going to let it go down, So, but all of those, yesterday, the 15th of March, we heard that the biggest shareholder in the bank, that is in a Credit Suisse, Saudi National Bank, won't assist the bank, won't lend more, won't invest more, because if it does, then it means if it goes beyond the 10% or gets up to 10% or thereabout, then it becomes a totally different picture here. The Swiss National Bank will now have to probably begin to disclose more and all those kind of things, but they're not willing to go down that road, So because of that, Wells Fargo and Morgan Stanley were equally affected in the last trading session. You can see here the folks at Schiffers Investment Research are saying that at the point they wrote this, Wells Fargo was down 3.2%, and it says here that after earlier hitting its lowest level since July of last year, 2022, WFC now spots a 23.3% year-over-year deficit, as well as a 7% year-to-date loss. It's only down 7% for this year, but since the last 1 year, it is down 23.3%, pretty much in line with, but not as much for year-to-date. It's not as much as some of these ETFs. Yes, not as bad as them. A lot of them have losses in the double digits. A lot of them have losses in double digits. And then Morgan Stanley as well is also suffering. It suffered yesterday, spotting a 6.6% midday loss and traded at 83.98%. Contrary to its sector peers, Morgan Stanley looks stocks longer term losses are more tame, and it's still up 11.1% in the last 9 months. Okay, so but I think the key thing that was that it took 6.6% in that session, but of course, as you just heard, the long-term losses are much more tame. Okay, so however, the equity is still trading near its lowest level since November. Bears are also active in Morgan Stanley options pits with 45,000 puts traded so far. That is as of when they wrote this piece, amounting to 3 times the average intraday volume. New positions are being opened at the most popular contracts. The weekly 24th of March $85 strike put. So yes, some of these stocks are presenting opportunities. If you're not confident about these other holdings, the components of this ETF, that is a QABA, then you can also see what you are going to make of at least Morgan Stanley. See what you're going to make of it. But yes, there's likely to be a rebound. Because they have taken some hammering. Some are saying that maybe because the Fed may have stopped selling the 10-30 spreads and all those kind of things. And maybe some of these banks have started to look at their books, given all that has happened with other ones like Silvergate, sorry, now with SVB and Signature and all those kind of things. They have now come around and started to see what's going on with their books, and they are all now in the need of using the discount window and other stuff. So but they're speculating. They're saying, some are saying that nothing, it's just a situation, nothing's going to happen, and some are also saying that this is what the bears want. They want to top down this market. They have their algos and they have their publications, they're ready to sell this market, sell it down and all that stuff, so see what you make of all of these. Okay, and I'll put more, you see more about this QABA ETF. This is just a hack. You can, if you buy the components, then you probably somehow were hacking the ETF. So this ETF is run by First Trust. You can see there, First Trust NASDAQ ABA Community Bank Index. So First Trust is this company, and they obviously, before they open their positions in these stocks, they must have most certainly done their homework. They must have spent money doing their research and all that stuff. So let's even see what the opinions and analysis are saying here. Let's see whether we can get anything here. Let's see what it's being said here. Okay. Yes, sorry about that. There was some background, some noise in my background. Sorry about that. Yes, so this is what's going on here. It's a technical analysis. Moving average conversion, that is MACD indicates a bearish trend. Chart pattern indicates a possible trend reversal. Okay, chart pattern indicates a possible trend reversal. Okay, RSI is also bearish. So yeah, moving average, the 50-day moving average is falling, which is bearish. The 200-day moving average is also falling, which is also bearish. Yeah, so see what you make of all of these this ETF and the components on the holdings, components of this ETF, and indeed Wells Fargo if you're keen, and then Morgan Stanley. Yeah, some rebound is likely to happen at some point. And thank you very much for watching this video.